Very good morning, everyone. Charles here of FRGNT Daily Chart Analysis, 7:50 Milano time, pre-London Open on the 5th of November, already 2025. As always, taking a look at the DXY, its current position, and what we can expect based on smart money concepts and my interpretation of that strategy. Now, with that said, it's all well and good looking at the structure, and it's a great basis to start. However, even more important should be put upon the economic calendar. And if you can see, I hope the screen is still recording, at the sheer amount of dollar news that is due today, in particular, red folder, economic news. So we have to be mindful, or me particularly, in terms of position sizing, reaffirming my trading plan, I should say, and really sticking to the fact that structure will always play king, but so does the DXY. And if the DXY is being affected by the US dollar news that is going to be released this afternoon, then of course we'll have to be tentative in the approach that we look to trade. Nevertheless, structure is also very important, so that's what we'll continue to do. So weekly time frame, bottom right hand corner, we can see that the weekly candle is currently doing as expected and rejecting that weekly 50 EMA, is also respecting weekly imbalances in terms of wicks that were previously created. And as I say always, and as I'm sure you're bored of hearing, that my theory is that wicks get filled. So once that wick is filled, we can say we can be looking for rejection from that area. Supporting rejection in and around this area is that weekly 50 EMA. Although we do foresee and forecast that price will close below that 50 EMA in terms of candle closures on Friday, can we look to see if that candle will push up higher before a potential turnaround? At this time, if you do look over to the 4-hour chart, bottom left hand corner, we can see we have had some slight breaks of structure, or a slight break of structure on the 4-hour time frame. With that said, when you look in depths of price action, we can foresee the price on that DXY could potentially still continue to that upside, and perhaps price is simply making a higher low after a higher high for a continuation higher high. But with that said, we do know we are heading into that weekly order block, supported shorts by that weekly 50 EMA as well. So that's the outlook on the DXY, and it's great to have that in mind when trading those pairs such as EU, AU and GU, which are directly influenced by the DXY and to a certain degree also EURGBP. So with that said, let's roll through the charts. Euro US dollar at this time, again we can see that price on the daily time frame has closed bearish, most recently below that daily 50 EMA. So I do know that my higher probable trades will be taken from and around the areas of that daily 50 EMA. Nevertheless, as an intraday trader, we have to take into consideration the here and now and what can we look to do. So towards the lows, we can see there is a 4-hour order block just over here on the bottom left hand corner of the chart. Now that isn't really supported by any higher time frame confluences apart from the previous daily low. If I do go to the left, in fact, am I mistaken? Incorrect. So the absolute lows are supported by a daily order block, which price hasn't tapped at this time. With that said, price does not always have to tap the order blocks that are created, and if we do see some strong breaks of structure to the upside, in particular on that 4-hour time frame, initially is what I do require, then we can look to isolate 4-hour order blocks, a pullback into imbalance, a lower time frame break of structure, followed by a lower time frame order block creation, and look for the long position. Now, with that said, there is always a reason to lose, and we can see that below we do have another 4-hour order block. Therefore, we do required to await that break of structure, as I said, and pull back into imbalance. What supports that particular long position from this area, if you're still focusing on that bottom left-hand chart, is the previous daily low. If I zoom into the middle chart here, you can see that is my daily time frame. As I always say, wicks look to get filled. This wick created on the 4th of November was filled by yesterday's daily candle closure. Now we've isolated that wick, waiting for price to drop down into that wick before a continuation long. At the moment, price is pushing, and that's good for us at this time as we seek and require breaks of structure to occur in order for us to have the confidence to take this long position. As I say, there is always a reason to lose in trading. We can't protect ourselves at all times. We can only do the very best we can with our strategy and execute it with minimal trading error. So taking a look now into the lower time frames, in particular the 1 hour time frame, as we look to refine that 4 hour order block, giving us the opportunity to buy at the absolute lows, knowing that in any case we cannot seek to cover that previous daily low. That's why this illustration is to indicate that I would, even when I should say price gets into these areas, I still will require breaks of structure even on that 15-minute time frame before I do look to get into that trade. Coming over to the right hand chart now, that 15-minute time frame, you can see I've isolated a 15-minute order block within the refined area of the 4 hour order block. It's all well and good having that there, but in an ideal scenario, I would much prefer price to come back down into that previous daily low, then give me my breaks of structure. I'd be able to comfortably take that trade whilst covering that previous daily low. So that would be the best that I could do in terms of protection from a reason that I could lose. Failing that, of course, if you bring your attention to the left-hand chart, we do know that even if we are to take a position from this previous daily low, price is very much so likely to come back down here to that 4 hour order block to give us the same pattern and setup for a long creation. However, if the setup does occur at this previous daily low or even in and around this 15-minute order block, I'll look for a shift in price action before looking to go long. So that's that plan fairly set. In terms of a short position, I would not be taking any shorts. Excuse the noise, living in the middle of central Milan can get a bit noisy. In terms of shorts, although I do have these order blocks highlighted here in terms of 1 hour and 15, I will not be taking shorts for the clear reason that I know that the higher probable trade will be looking for longs from the lows, and we are going to be longing into that shorting into that daily order block, which I'm not comfortable to do. Therefore, shorts are off of EU unless price gets up to these highs in and around that daily 50 EMA. In order for me to take a short position. So no shorts from here. I'll be looking for long positions only on Euro US dollar. AU, got a series of complex charts, to be honest, with quite small trading ranges, but with that said, with a small trading range, it just means that our execution has to be absolutely spot on in terms of looking for those lower time frame breaks of structure to isolate an area to have our stop loss cover the highs, but also give us that range in order for us to at least get to break even at 1 to 1.5 risk to reward before then locking our trade off at break even, as I say. But again, bottom right hand corner, you can see that weekly time frame again. As I always do, I simply highlight previous weekly highs, previous weekly lows, wick imbalances, and then look to refine those areas. So that weekly 50 MA is doing its job exactly as it should do indeed. Previous weekly candle closed bullish, it closed bearish, but it closed above that weekly 50 MA. So of course we expect this current weekly candle to wick into that weekly 50 MA as it has done and reject it. Therefore, shorts from the daily 50 MA is a position that I am willing to take, but I do know already that I will need to manage that aggressively, as I am aware that that weekly candle is more than likely going to close bullish above that weekly 50 MA, doing exactly what my theory suggests. So although I'm trading against my theory, I do know that I'm going to have to manage that position aggressively in order to not essentially get myself stopped out by the rejection from that weekly 50 MA. With that said, I'd be more than happy to take long positions from in and around those lows, in particular that weekly 50 MA if price does come back down to that. To support that ideology, we have had bottom left hand corner now, have had some subtle breaks of structure on that 4-hour time frame. So I'm simply waiting for price to come back down into that order block created on that 4-hour time frame. As always say, give me some lower time frame breaks of structure. Look to isolate a 15-minute order block before then looking to go long in line with the weekly 50 EMA. So once price gets down there, that weekly 50 EMA should be holding since the lows have been rejected. That wick imbalance towards the bottom right hand corner has been met. That wick, as you can see, has been filled. This wick still has not been filled, but what's the day today? It's Thursday, so I'm not going to put my opinion to it. Price can do exactly or whatever it would like to do, but I'd say it's quite unlikely that price will then look to refill this wick that's already been created in the entirety and continue pushing lower. I'd be quite surprised to see that. However, that's why this area, I'm more than happy for price to come back down into it before us then looking for a long position. Just take your attention just to that 15-minute time frame just to explain the range that we have. So in terms of short positions, as I said, more than happy to take shorts, but I do know I am going to be trading into that weekly 50 MA. So I do need some confluence first of all before looking to take that short. I've highlighted the structure point here, which I know it looks as if I'm looking or asking for a lot from price action, but if you stick to your plan and it materializes, that's when you've got your evidence to then take the trade. So before I take that short against that weekly 50 MA, I'm going to require a 15-minute break of structure without any doubt whatsoever. So I've isolated just a simple area here. Let's see if price will come up into those highs, push, come back up at some point, potentially tomorrow, and then we can look for that lower time frame break of structure before then going short. In terms of longs, which I'm more excited to take, that would be a simple process of price coming back into that 4-hour order block that's been created. Give me a lower time frame shift. Create me, please, a 15-minute order block that I can look to trade from before looking to take that long position up to those highs. In an ideal scenario, I'd much prefer that these highs are not tapped before my position is then taken. That will give me a clear target that I know has not been mitigated before looking to go long. As you can see here, I've just measured a little trading range, roughly 40 to 45 pips, potentially even more than that. Closer towards 50 pips is the range if I can look to isolate an area and get myself a nice tight stop loss covering at least this low here. So just to give you a nice representation of what I could be looking at, 10 pips, be looking to go break even at 1 to 1.5 and then look to rein that up to around about 5% towards that 4-hour 50 EMA. GU, currently in no man's land, to be quite honest. It's a setup that I know should materialize in the future. I don't think it's going to occur this week by any stretch of the imagination. However, just to explain the chart and my reasoning behind that, price previously closed below that weekly 50 MA, so I'm expecting price to retest that weekly 50 MA at some point and would look for continuation shorts rejecting that weekly 50 MA. If that isn't the case and price does come up towards that 50 EMA at some point, that would be even better, because we can still say that by the time price gets up to there, then we would have that basis that the weekly 50 EMA would be rejected, and then that would give us some confidence to actually take that short position against the candle that would be pushing. If I were to draw up, the candle would be pushing bullish. However, due to our theory that once the previous candle closes below that weekly 50 MA, we can expect the next candle to do exactly the same. Price will be pushing on that weekly time frame. We gain ourselves a nice execution, and by the end of the week, we would expect that candle to flip bearish, leaving a solid wick to the highs, and that's how we would look to take that trade. So for now, as I go down through the time frames, you'll see that there's not too much to get excited about just yet. We've isolated a daily order block, refined that with a 4-hour order block. If you'll look just to the left hand corner of the chart, currently price is, let's have a look. 60 pips away, so to be quite honest, that's a day of price action. So if price does get there today, then we could expect a reaction tomorrow, but certainly a 60 pip move on GU is not unheard of, but I'd call it just about 60 pips for the day would be more than a good range of trading for GU. However, once price does get into around that area, that short position is supported by the fact, top left hand corner on the 1 hour time frame, that 4 hour 50 EMA is coming down to support that position. Once price does get up there, you can imagine that 4 hour 50 EMA will keep sliding down, giving us that confidence that price is going to be held under that 4 hour 50 EMA as it is at this moment. Bottom left hand chart, you can see that price is beautifully respecting that 4 hour 50 EMA. So once price gets up to this area, I expect much of the same. Using the facts only, that's exactly what's happening now, and I expect that to continue. To give you an illustration of that, you can draw that weekly 50 EMA like so. Once price gets into that area, rejection before looking to go short. So that's the idea behind GU at this time, but as you can see, price is a fair distance away as we're looking to speak. So it is what it is for now. No long positions. I'm not looking to trade any reversal positions against this at the moment. Price is incredibly bearish, so I'll just leave it as it is, wait for price to get into my area before looking for a short position. Just on that daily time frame, we do have an order block towards the lows as well, but again, price is a fair way away from that. Got an alert in terms of crossing down and crossing up. I'll just be leaving GU just like that for now. In terms of EG now, a position that I've been looking to take since Monday, to be quite honest, looking for that short position. Managed to grab a nice 3% yesterday on EG with a lower time frame break of structure as price came into a 15-minute order block after that 4 hour candle close that I was talking about. If you're unaware of what I'm talking about, please see the previous video. Waited for a 4 hour candle close from an area, providing that break of structure, waited for that 4 hour then to retrace back into the wick created. 15-minute order block was also remaining at the top, waited for a 1 minute break of structure before taking that short position. So EG bagged us a nice 3% yesterday. However, in terms of today, what can we see? Weekly time frame price is still in and around those highs. We've got this formation looking to be created here on that daily time frame with wicks that have now been filled. We've got previous daily high that's been indicated, or rather illustrated. Potentially price can push back up into that previous daily high, and as I've drawn here on that 15-minute time frame, hopefully, or we can forecast that a 15-minute order block should be created as a result of some breaks of structure. Once that happens, then I'll be looking to take short continuations on EG if it aligns across the other pairs, and the euro is starting to fade with the pound strengthening. I'll be definitely looking to take that position again. Like on another pair, can't remember the one, but I've got a structure point that I'd like to be broken before taking immediate short positions from a lower time frame order block that is already in and around this area. However, if this break of structure does not happen, I need price action to provide me with some areas in terms of a 15-minute order block to look to be trading from. Again, as you can see, we're around that previous daily high at some confluence for short positions, wick imbalance, and also on that weekly time frame indicated in grey. You can see that we are in a weekly order block, also refined down to a daily order block that price is respecting nicely and rejecting, providing us with no breaks of structure just now in terms of the 4 hour time frame. However, what we can see is that price is at least stalling. If you look to the left, price was trending up, some explosive moves. We have had this now being created here, so we can potentially forecast a short move down before potentially a continuation into next week. But for now, we trade the facts only. As I say, if we get a break of structure, I'll be looking to take this position off a 5-minute order block, then look for a lower time frame break of structure before shorting. If this break of structure does not occur, or rather if this structure does occur, that's what I'll do. If it doesn't occur, then I'll need price action to provide me with a 15-minute order block to trade from. Thank you very much for listening. 20 minutes wasn't really the goal, but nevertheless, that's a DXY, EU, AU, GU, and EG. My name is Charles, FRGNT Daily Chart Analysis. Have a safe trading day. Just remember the economic calendar in terms of US dollar news, red follow news. In terms of myself and trading this position, it wouldn't be trading in general, wouldn't be really trading in and around economic news of such degree. However, of late, it looks like there is US dollar economic news almost every day. So it's just in terms of adapting your trading profile, in terms of risk management, reduce lot sizes, looking to lock trades off at break even sooner rather than later, and focusing on structure and no emotions to be present. Thank you very much for listening. Your continued support is valued. All the very best in your trading day. Take care. Charles.